it's Gail with Traders Help Desk, and this is a trade I'm currently in on the euro dollar. And I entered at the opening of this bar. So the opening price was 11.37, and I went out of the money to 1.1124. But I have a zigzag indicator on here because I realize that helps new traders identify the highs and lows. And when you're looking at an uptrend, you're expecting price to be making higher lows and higher highs. And then you can see over here that we started making lower highs and lower lows. So you know that you're in a downtrend, and the zigzag indicator actually helps new traders pick that up. Then you can see that we have come back and we have tested this line 3 times. It moved down and then it went back up to test and make a new lower high. When it did that, if you're looking at the stochastics, you can see from this high to this high, it was making higher highs, but from price is actually making lower highs. That's called hidden divergence. And usually that is a very good indication that price is going to continue down. Now, right now, I'm waiting to see if this high is actually exceeded. So we have a high that's about right here at 23. So if this bar actually goes back up, then I would consider exiting the position. Now, I've already made at least double my risk, okay? So I'm confident that this will probably continue down. But this is just an easy way, if your platform has a zigzag indicator, just add it to your chart and follow your highs and lows to determine whether you're in an uptrend or a downtrend. You'll also notice that each one of these points on the zigzag is typically a 3-bar reversal. So here you have a reversal, here you have a reversal, reversal, reversal. All of these indicate on the live edge of the market that price is making a pivot point. In other words, it's going to pivot in the direction of the pivot bar. In this case, the pivot bar was to the upside, so it's going to go up. In this case, the pivot bar is to the downside, so it will go down. As you can see, this bar did close up, and that makes it a pivot point. And if you're looking at a downtrend, it should not do that. Okay? And this is a key aspect because it's now making higher lows. And this is when you know your trade is in trouble, especially if you only have a few minutes left. You don't have time for this retracement. So in this example, I actually exited on this bar, and I made 31 in profit because I exited at 46. So I got just a little bit more than a 1-to-1 risk to reward ratio. But in my opinion, this was going to go against me, and I did not want to allow it to take the profits that I had already made. Now, I like to get a 1-to-2 risk to reward ratio because that's like the best, a minimum that you want to get. But sometimes the market does not give it to you. And this is a great example of I had the opportunity to lock in $31. So I went ahead and took that because this may go and it may take out this high. That would go against my trade position. I worked for this profit, and I want to make sure that I lock the profit in when it's trying to give it to me. And that's the number one job of a trader. Take your profits.